Next slide here is an example from a green building perspective. And if you go to capital E analysis, the source at the bottom, you can see details around this. In that green buildings, whether new or retrofitted, not only have energy savings, emission savings, and water savings, but also have a productivity and health value savings. These are explicit, easy to calculate financial benefits that you can put into a traditional net present value or discounted cash flow. And if you have a carbon accounting system like Climate Earth, that can help you not only notate what your potential savings are, but what the value of that carbon is in the future, which we'll touch on. And for very little incremental cost, if any, typically in construction or retrofits, it's about substitution. Another example here is in the trust category. So what does trust and transparency mean from an environmental value chain, or you could even call it a carbon chain? So Walmart has launched a new line of jewelry called Love Earth. Since launching it, it created positive growth for this line of products in a declining category for Walmart. It's targeted to be 10% of their jewelry line by 2010. And so when you buy this jewelry in the store at Walmart, you get a small numerical code, which you can go to the loveearthinfo.com site at Walmart. Type it in, and you will see from which mine in Utah or Australia that gold or silver comes from, and where it might have been processed in Belgium if it came from the Eastern Hemisphere, and might have been processed in India or even in South America and in Peru, and then how it got to Walmart. And you can do this on and it shows it on a Google map. So again, this transparency is not only shown to the customer internally within Walmart through its supplier scorecards. It's tracking the carbon associated with mining, refining, transport, crafting, and delivery. And Walmart's overall goals, which you might be familiar with, are not only to have zero waste, but also to minimize natural resources and water as well as carbon. And then finally, from a trust perspective, this is about communicating what you do well. United Technologies, which is one of the hippest companies in our investment research, explains the product design and the express eco-benefits in this is one of their new buses. And as you can see from the tagline here, can the right thing and the profitable thing be the same thing? The answer is yes, not only for the operating earnings of United Technologies, but also for its price to earnings value. Once United Technologies started advertising, they realized a 4 to 5% bump up in their market value by being specific about in ads like this. Okay, so how do you design this for financial value? So in the HIP framework, we track 7 categories of quantitative improvements. These are results-based metrics, not unlike what there's a public company called PHH, which does fleet management. One of their taglines is, we measure outcomes, not technologies. So whether it's a hybrid or a biofuel, they're looking at the end result of lower greenhouse gases, lower CO2, higher resource efficiency. And so across these categories, each of them can be associated either with new products, like we talked about with Clorox Greenworks or Love Earth Jewelry, bottom line profit growth, like we talked about with the Sun servers, tax optimization, so payments from state and federal sources, especially now with the forthcoming Obama environmental bill later this year, as well as companies like Walgreens who are putting solar panels on their stores, not only nationwide, not only in California and New Jersey, but Walgreens stores tend to be in lower income areas, so it helps create jobs and income as well. And then we talked about the price to earnings ratio and increasing the future growth rate. So leaders, as we've done our research now on 300 plus companies at HIP, and again, we're starting from the S&P 100 going down into the S&P 500. Our S&P 500 research should be complete by the end of May. And then we build an index around, an investment index around that, so that individual investors can invest in that. And again, that'll be available this summer. So, here's a variety of leaders in each of these categories. On the carbon side, United Technologies, a industrial-oriented company, and Raytheon, a defense contractor, both leaders in their greenhouse gas and CO2 performance because engineers are in the middle of how they're designing products, and engineers are quantitative people. And in engineering organizations like that, the engineering managers are managing by the numbers, not only the profit numbers, but the CO2 numbers, as well as talent satisfaction. Microsoft has been doing some very aggressive things in terms of renewable energy, both in Europe and the U.S., and Avon is also a leader in this category. On the renewable power side, you've probably seen Wells Fargo notated for its large purchases of renewable energy credits, but International Paper, highly capital-intensive and previously carbon-intensive company, is doing a positive job there. And then forthcoming, in the future, from a water efficiency, you have companies like Caterpillar and Abbott that are being quite effective. So what we do is we look at the outcome and measurable outcomes here, and we tie them to how they drive financial results. And the top performers just for this Earth score are companies like United Technologies, Hewlett-Packard, Pfizer, and Raytheon. So you can find more information about them not on their websites, but also from HIP. Okay, so what does this mean for how you might invest your capital internally within your company? What this chart from McKinsey and the National Resources Defense Council shows, in summary, is how investments in building efficiency, retrofits that reduce not only the carbon but save HVAC, heating, ventilation, air conditioning bills, and energy bills are your best investments, your shortest payback investments, typically 2 years or less, sometimes even 9 months. Transportation efficiency in terms of not only fuel, but also operations and maintenance, and switching either to hybrid type vehicles or a mix of public transportation or even telecommuting. So at Sun and HP and other Silicon Valley companies, there's a high proportion of telecommuters, and except for groups of engineers and R&D, that's able to reduce the overall society footprint as well as company footprint. And then, of course, traditional industrial efficiency measures in terms of designing products for carbon efficiency as well. And then on the right-hand side, those are ones where a short-term net investment might be required in terms of renewable power, let's say wind farms, and then larger solutions across companies, say for carbon capture and storage. Okay, so what is this worth? So as you may be familiar with, carbon prices vary by market. The Chicago Climate Exchange price as of this week is about $2.25 per ton, per metric ton. It's a voluntary exchange but legally binding. Companies like News Corp have signed up to reduce their carbon footprint. The recently launched, since last quarter, there are quarterly auctions of greenhouse gases in the Northeast from Maryland and Delaware on up the East Coast, excluding Pennsylvania. So that's commonly known as RGGI. The last auction price in December was $3.38 a ton. The next auction is this month, mid-March. Again, that's focused on the power sector and is mandatory. Company-to-company trading takes place, and sometimes those carbon credits are enhanced with social credits and create a premium up to $20. And then the European Climate Exchange, which last summer was as high as 27 bucks a euro, 27 euros a ton, which at the then exchange rate of about $1.58 reached about $45 per ton equivalent, is now two-thirds lower at this point in time. So the price of carbon has come down as the price of stocks have come down as well.